Hello everyone, I hope everyone's doing well. Guys, as you can see here, this is the live markets, NZD, JPY, and guys, today I want to teach you a really important lesson, which is why is the market moving down? Why is the market moving up? The goals of the market as you see a movement happen. Now, as usual, I will let future Roy do all detailed explanations. However, right now I'm selling the market into this liquidity right here. I'm showing you the trade as it's triggered in, and Roy in the future will do all further explanations. So let's see how this goes. So guys, on top of the NZD JPY trade that I showed you guys, I'm going to also take this Euro USD trade. This is the live market as well. Where is it? Right here. So this is the live market as well. I'm getting triggered right now, and I'm selling into this liquidity right here. So let's see how this goes as well. Hello everyone, I hope everyone's doing well. This is Roy, in the future as usual here to explain to you what happened with those trades right here. Now first of all, let's start with NZD JPY. As you can see here on NZD JPY, the market pushed in my direction. However, first, before it does that, it pushed into my stop loss, triggered me out, and then pushed in my direction. Now, when it comes to Euro USD, the second trade that I took, as you can see here, no drawdown at all. It just pushed in my direction directly into my TP area. Now, let me teach you a little bit some lessons here, and let's get right into it. So first of all, what I want to speak about is that, guys, whenever you start trading, there's concepts right here. You add in rules to these concepts, and then those rules, they make you profitable. And if they don't, you add in more rules, you keep adding rules, or changing your rules until this concept that you initially chose, it makes you profitable. This is how it's done in the trading industry. So whatever you choose here, whether it's order blocks, trend lines, Fibonacci, double bottom, double top, all this shit, whatever you choose, it won't make you profitable. What will make you profitable is the rules that you will add to this concept. So when I speak about always, okay, trend lines are liquidity, double bottoms, double tops are liquidity, order blocks are liquidity, because they are obviously taught to you for free, publicly. Everyone knows about them. Hedge funds, big financial institutions, they know about them. And even let's say that you're not going to believe in this conspiracy theory that they were created to manipulate you, at least if they were created by normal people, now hedge funds and financial institutions know about them, and of course they're going to use these concepts against you to trick you into a certain direction in the market, so they buy or sell to you. Now let's get over this idea. However, even if you choose these concepts that are liquidity, then if you add in the right rules to these concepts, you can become profitable. Now, one of the rules that I use for my trading strategy is identifying the goal of the market. So let's write it here. Identifying the goal of the market. So whenever the market is moving up or down, I'm not satisfied by just looking at the market and saying, okay, the trend is up or the trend is down, all that shit. No, I look at the charts and I say, why is the market moving up? Why is the market moving down? And I want to identify a certain point which I believe the market is running into. So I don't care about just the current structure of the market. And even if, let's say, I have this goal right here, I want the market to get into this point right here. Let's say if the market is right here and it switches structure, I'm not trading that structure shift. If I'm trading an order block, let's say, I won't trade that structure shift. No, I want to wait the market for it to get into this point, this goal, before I start looking into sells, for example. So I don't trade anywhere. I set goals in the market. Now let me tell you just how identifying goals in the market will help your trading career. Let me do this, go down, and tell you that. Now, let's talk about how identifying goals in the market will save you from taking so many bad trades. Now, let's say this is Euro USD, and Euro USD is going up, for example, and you want to sell Euro USD. You believe on a higher time frame perspective that Euro USD is going to go down. You believe that there is some news, for example, that might push Euro USD through to the downside and all that shit. Let's say this is how you're trading right now. Now, the difference between me and every single other trader is I have an entry model, you have an entry model of your own. Then let's say the market is going up and you want to sell, you believe that Euro USD is going down, you're going to sell everywhere as the market is pushing through to the upside. So let's say this is your entry model, the market shifts structure and you want to sell right here as soon as the market comes back to this order block. You're going to do this every time this happens. So every time this happens, you're going to try to sell this order block and you're going to lose, because the market is simply pushing to this C goal first before it starts pushing through to the downside. So the difference between me and you is that you're going to take every single one of those trades. 1, 2, 3, 4. So you're going to lose 3 times before you get that one win. And yes, you'll message me, you'll DM me right here on Instagram, and you'll say, oh my god, I took the same trade as you, now I understand how you trade and all that shit. However, the difference between me and you is that you took all these trades right here as well, and I didn't. The reason why I didn't is because I was always waiting for the market to satisfy a goal, which is the C point. And guys, don't worry, in this video I will dabble into how I choose my goals. So I sold this goal right here at C. I made some money. You lost 3 times before you lose. I'm not saying that I don't lose, of course I do. However, not this way. I don't lose this way. So let's get into another scenario, how identifying a goal might save me from taking bad trades. Now let's say you're an order block trader. You mark this order block right here and you want to buy it. Now let's say the market pushes through to the upside into the C goal and then comes back to your order block. The difference between me and you right here is that simply I won't be taking this trade because the C goal was satisfied. So I don't see the point of the market pushing more through to the upside because my goal for the market is satisfied. You, on the other hand, are just looking at this entry model. You're just looking at this order block and you're waiting for the market to come back to this order block to buy it. And this is wrong. When the market, there is a certain system that you should choose that is called when do you delete your order. This should be in every single strategy. So every time you try to enter, if you enter on a sell or buy limit case, or even on a buy stop or sell stop case, you want to identify, okay, when do I delete my order? When do I say that, okay, this is not a trade that I'm going to take anymore, even if you have decided that you want to take it before. So in my case, if the market reached the goal that I'm looking into and then comes back and forms my entry setup, then I won't take it because it already satisfied the goal that the market wanted to satisfy. So those are the second kind of bad trades that I will be avoiding by identifying goals in the market. Now, even after today, I will dabble into how to choose a goal. Will your goal be always correct? Of course not. You will choose a goal and you will be wrong and the market will push into a higher or a lower goal a lot of the times. However, as I said, it will stop you from trading all over the place and only limit your choices to certain areas that will be better for you. And on top of that, let's say that the market is going up. Let me just find my arrows right here. Let's say the market is going up and you choose multiple goals. Let's say you're like, okay, the market could either push into this goal right here, or this goal right here, or maybe this goal right there. Since you're choosing your goals based on accurate metrics that I'll show you, for example, liquidity graphs, I will talk about it right now, then there is a possibility that you get a small retracement after the market reaches its goal, its potential goal. So even if the goal of the market wasn't actually B and it wanted to push back into A, you can still get a profitable trade from this small retracement right here, even if you've identified the wrong goals. So this is one of the perks of also choosing goals based on metrics that are accurate, because you can then get this reaction, even this small reaction from this area that you'll be able to capitalize on, as I will show you on EURUSD right now. It's my trade on EURUSD. So this is one of the things. So even right here, if the market pushes up and it doesn't give me a retracement, let's say it keeps pushing into C, then I will win one, I will lose one, and then I will win the C trade if it reverses from there. So it's not even that bad to identify wrong goals in the market, as long as you're trying to identify goals, and you will get better. You will get better at identifying the zones or the goals of the market, where the market is pushing to, as long as you do it. So let me try to give you just a little hint, or just some lessons on how I choose my goals. So guys, one of the ways that I actually identify goals in the market is actually the only way that I identify goals at the market is by looking at liquidity graphs. So I'm waiting for the market to get into a stop loss area. This is it. So can the market reverse before reaching a stop loss area? Can the market form liquidity and then reverse? Can the market reverse when you don't understand why it reversed? Of course it can. However, you're not trying to just like learn or explain or just understand every single information in the market. You're not trying to do that. What you're trying to do is you're trying to focus on one concept in the market and trying to trade that one concept, and this is how you become profitable. For me, that one concept, that one aspect, I mean, because concept is, I consider it an entry model, like an order block, trend line, all that shit. An aspect of the market is looking at the market from one perspective. For example, there's people who look at the market from a perspective of support and resistance, are like people are rejecting certain prices and they look at prices that people have rejected multiple times and they call these areas like important areas. For me, the aspect that I'm using to look at the market is just liquidity. Am I 100% correct all of the times? No. However, it's an aspect that I chose to focus on and it made me profitable, and I will continue to focus on it because of that. So let's say EURUSD right here, it was pushing through to the upside. So the moment I logged into the market and I looked at EURUSD pushing through to the upside, I was like, where is it pushing through to the upside? Why is it pushing through to the upside? Let's identify some goals here. I zoomed out and I saw simply this double top right here. 1, 2, even triple top, 3. So 1, 2, 3. The market is touching this strong resistance line 3 times, convincing people to sell. And even right here, as the market pushed into it, we just retraced a little bit from it, convincing people to sell. Those traders selling this strong resistance line, where they would place their stop losses? Above the most recent high, so above right here. So this is a goal in the market that I'm looking at. This is an A goal. Now, as I said, can the market reach this goal and not absolutely reverse from there? Yes. However, at least after grabbing liquidity, we are most probably likely to get a small retracement, and out of that small retracement, I want to trade, I want to get into a profitable trade and leave. I don't care about the whole market reversing. I don't care where EURUSD will go in 6 months. I don't give a shit about that. I just care about, okay, the market reached the goal and we might be able to see a small retracement from that goal, and therefore I will sell. So as you guys can see, the market, after grabbing this goal, it started pushing through to the downside right here. I sold from there. I targeted this low right here. I was in and out. Now, what happened after I was in and out? As you can see, the market then retraced and went through to the upside, and it might be pushing into a higher goal. So I don't care about the market reversing from my goals. I care about the market just simply giving me a small retracement in a way where I'm able to trade. Now guys, when it comes to NZD JPY, as you can see, as soon as I opened the market was already pushing through to the downside. However, just as an exercise, I will go to the moment where the market was pushing through to the upside right here, and let's identify why was the market pushing through to the upside. Identify a goal for the market. Now, as the market was pushing through to the upside, right here, as you can see, we pushed up into this double top right here. We grabbed their stop losses. Let's call that goal A. And then after grabbing the stop losses, the market started pushing through to the downside. Now, when I opened the 30 minutes chart, of course, I saw NZD JPY already pushing through to the downside heavily, and I identified the goal for the market through to the downside. So right here, we have this triple bottom. 1, 2, 3. We already formed this triple bottom, and I told myself that we formed this double bottom at least before this liquidity was grabbed, and we have liquidity below this low right here. People who bought this double bottom right here will place their stop losses below the most recent low, which is this point right here. So I knew that the market is going to push, or I assumed that the market is going to push into this goal right here. Let's call it B. So that's the A goal, the liquidity that was grabbed through to the upside, and that goal was B, where I'm expecting the market to push through next. So I identified this goal. Now I need to enter. Now, what is the mistake that I did? Why did I lose this trade? Simply, I lost this trade because there was this strong resistance line right here that I didn't pay attention to. The stop losses of those traders right here were above the most recent high, which is right here. So what happened is that the market pushed through to the upside. It grabbed these
stop losses through to the upside, and then the market pushed in my direction. Now I didn't pay attention to this, so I placed my stop loss exactly where they would place their stop losses, and we all got triggered out before the market eventually moved in my direction to my chosen goal, which is B right here. Now if you go to EURUSD, for example, now before I enter, usually I need to see some liquidity grabbing before I enter. Now on EURUSD this happened because simply, if you look at this double top right here, people were selling and placing their stop losses above this area right here. Now what happened is that the market pushed through to the upside, it grabbed these stop losses, and I entered right here, and the market then retraced a little bit before continuing the move through to the upside and grabbing all left stop losses through to the upside. So we had a liquidity grab at least, which made this trade more valid than the NZD JPY trade, which is why I'm assuming that I lost the NZD JPY trade. It happens. What matters is this is a 1 to 3 risk reward ratio, then -1 on NZD JPY. I'm still plus 2% up if I was risking 1% per trade. So it doesn't matter. However, it's very, by the way guys, it's very important to identify reasons as to why you lost. Don't say, oh, I lost because of statistics. No, you go to your trade and you identify the reason that you lost, and then you move on. It's simply as that. You assume the reason that you lost because you don't know for sure. You assume it, you write it down. Now, as soon as you make so many assumptions, I lost because of this, because of that, because of that, because of that, at the end of, let's say, the 2-3 months that you're live trading, you're going to realize that you have a paper full of assumptions. However, there's a lot of matching assumptions that could form patterns. Okay, I'm losing every time I'm writing this assumption, I'm losing, and therefore maybe I should stop trading this particular pattern, and you'll stop and you'll save yourself from these losses. So always assume at least a reason that you lost. It doesn't need to be very specific. It doesn't need to be very like the exact reason why you lost, because as I said, you wouldn't know that unless it becomes a pattern and you see it all the time. For example, if I lose, let's say, the next, let's say 15 trades that I lose, let's say I lose them all because the market formed an area of stop losses and they weren't liquidated, and I lost because I placed my stop loss exactly where they would, as I did on NZD JPY, then I would know out of my assumptions that it became a pattern and I'm losing multiple times because I'm doing that. So I'm going to stop it. It's as simple as that. You assume and you move on until you have a big batch of trades that then is a pattern and that you can judge. All right, guys. So this was everything for today. Have a great day, have a great evening, and good luck. If you want to speak to me, you can do so on Instagram. It's the only platform where I use to actually talk to people, reply to DMs. I do Q&A sessions every day. So feel free to follow me there if you want to interact with me on a daily basis. Good luck, guys.